What's up, everybody? Jake Fletcher here, Remax Advance in the Fletcher Group, bringing you the U.S. real estate news. Going to be switching things up a little bit. As you can see, I've switched up a good bit here. Got a new vibe going on in my my home office recording situation here with some sound panels. So hopefully the sound is a little better. I think it definitely is. And going to be switching up the pace that I release these videos. Going to be doing them every other week instead of every week, partly because sometimes I feel like I'm stretching on some of the stories. You know, I want them to all be very significant and meaningful. Not that there's stories that aren't, but something that's interesting, meaningful, and has significance. And there's not always the biggest stories every week. So switching things up for that, and also because I am putting out also my podcasts on the second and fourth Wednesday of every month. So my real estate news, I'm going to start doing it on the first and third week. Not sure what day yet. Let me know in the comments if you have an opinion on what day it should be. But right now it's just kind of going to be every first and third week, whatever day works best. And I had waited to kind of put out a post-election real estate news. So that's what this episode is. And we have a lot of election-related news stories. The other thing I'm switching up here, a lot of changes this week, I'm going to be actually separating the U.S. real estate news from the Florida real estate news, and they're going to be two separate videos from now on instead of the Florida at the end of the broadcast. I just think that'll work better. So let's just go ahead and start the news then, now that we got that stuff out of the way. Got the the clerical stuff out of the way here. So, like I said, this episode, I wanted it to be kind of a post-election wrap up and cover some of the stories that may or may not have come out in regards to real estate and the election. So we've got a few stories here. The first one's coming from Realtor.com. How President Joe Biden will reshape the nation's housing market. So at this point, you probably know that Joe Biden has been projected to win the presidency. So here we go. This story came out today from Claire Trapasso in Realtor.com. So it was a knockdown, drag-out fight, blah, da, 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 da. The election played against the stark backdrop of the deadly COVID-19 pandemic, a battered economy, and a myriad of hot-button racial and immigration issues. Almost lost in the partisan spectacle has been the future of the white-hot housing market, but the 46th president's ambitious housing plan could have momentous consequences if it shakes out to more than just empty campaign promises. A historic home shortage and record low mortgage rates have pushed prices to new heights, even as the U.S. entered into the worst recession since the Great Depression. Quote, everyone may not love the outcome of this long, drawn-out roller coaster of an election, but I think everyone can breathe a sigh of relief that it's over. I can relate with that, says Realtor.com chief economist Danielle Hale. Quote, Biden has a really ambitious agenda that will try to create opportunities for more low and middle-income Americans to become homeowners or afford rental housing. That could result in some big changes, said Edward Getz, an urban policy professor at University of Minnesota in Minneapolis. Quote, the issue is really how affordable housing as a category of efforts compares to the other things he's going to want to accomplish, such as student loan debt, climate change, and how he prioritizes them, says Getz. Soon enough, Biden will have to make good on his campaign trail promises. Here's a roundup of his to-do list. So, campaign promise: help more Americans achieve home ownership. This is great for everyone, right? The homeowners that are becoming homeowners, the non-homeowners becoming homeowners, rather, people who are buying and selling in real estate, realtors. It's great for us. It's great for the economy. The more we all are doing better, it lifts everybody up. What is it? The rising tides raise all boats, right? So one of the main planks of Biden's $640 billion housing plan, which his campaign dropped in February, has been to help more Americans become homeowners. Now that he's president, he has the opportunity to turn that high-flying plan into reality as he tries to heal the divisions within the nation. He plans to give first-time home buyers a down payment tax credit. Oh, I lost my video, didn't I?
Let me float that on top. Boo, 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 boo. Hey, all right.
He plans to give first-time home buyers a down payment tax credit of up to $15,000 that they could actually use at the time of purchase. As home prices have soared in recent years, this could be a big help to many cash-strapped buyers. The median home list price was $350 in September, according to most recent data available. I actually didn't even know that this was in his plan until I read this article. So I mean, maybe they need to kind of get that out there a little bit more, because I'm pretty politically involved in terms of paying attention to everything going on leading up to this election and just in general. Although I'm going to be doing a podcast this week about how I'm cutting off politics. So, but I've been very politically involved for years and years and years in terms of just staying up on things. And I never heard about this. So maybe some of you guys have. You could tell me, that I'm an idiot or whatever, but they released this in February, their plan here to give $15,000 tax credit that they could use at the time of purchase. So they wouldn't have to, these first-time homebuyers wouldn't have to wait until they filed their taxes. They'd be able to use it at the time of purchase. So exactly how that's going to go, I'm not exactly sure, and I tried to read into it some more, and I couldn't get exact specifics, but it's a good plan, I think, just at the general level of saying, hey, we're trying to help more people become homeowners. Our economy will thrive and do much better when more people have stable economic circumstances in their life. One of the best ways to have a more stable economic circumstance is to have a fixed rate mortgage rather than a rental rate that can go up, from year to year or every so often, right? And also too, you build equity. You're building wealth as a homeowner. So, like I said, rising tide raises all boats, or however that goes. I think that's right. But the more people who can afford houses, the more people who, or the more people not just that can afford houses, but the more people who are homeowners, the more people who can participate in the economy in ways that they could not do before, the more that people are going to be able to afford things that they weren't able to afford before, and build that wealth, build that generational family tree changing wealth. So I think that's just such a great idea. So I really hope that he makes good on that. Quote, Biden recognizes how challenging it can be for some people to become homeowners. His administration will pursue policies that will make getting your foot in the door easier. Meanwhile, teachers, first responders, other public and national service workers would also be eligible for down payment assistance and lower home prices. However, they would need to buy and move into homes in either struggling, low-income neighborhoods or pricier communities that don't offer much more reasonably priced housing. Quote, these are some of the more innovative ideas about combining housing assistance with improving communities, says Getz. It's a good thing, but I don't know how much of that is actually going to happen. So this is the part where I started to get a little cynical, because, politicians will say anything to get elected, right? We know this. And this isn't a commentary on Joe Biden. This is just politicians in general. Whether you're on the left or the right, we all know the politicians, and they're not always the arbiters of all truth, right? They're not necessarily the most honest sometimes, or maybe, I think people do have good intentions, but then, what if a bill starts out on the far end of whatever end of the spectrum, it's going to actually, once it gets passed, it's going to be closer to the center, because there's got to be, compromises made from one side to the other, because that's how our political system works. So no matter how extreme a proposal might be, it almost never is going to end up being enacted into law the way it was originally proposed because of that, right? There's always some compromise. So here we go. So campaign promise, address racial discrimination in housing. Even before the Black Lives Matter protests erupted across the nation in response to the death of George Floyd, Biden pledged to help fight the racial housing gap. The gap has resulted in lower homeownership rates and therefore lower household wealth for communities of color. He's proposed creating a national standard for appraising homes to make sure properties in communities of color wouldn't be assessed for less than similar homes in comparable white neighborhoods. Quote, it's certainly a step in the right direction, but it's not going to completely solve the problem, says Hale. That's because buyers will ultimately determine the price of a property by how much they're willing to pay for it, right? Free market economics. Now, side note too, we're talking about the guy who wrote the 94 crime bill, and I mean, Biden supporter or not, we have to all recognize that was a misguided bill. It displaced many African-American families in our country, ruined a lot of, lives of black people and black families. So, I mean, is this Joe Biden atoning for the past, or is this something he really, really cares about? Or maybe it's a mix of both. I don't know. We'll see, right? But I think that there is some element of, of authentic care, right? I do think that whether he's going to do it or not, I do feel like just based on the amount of emphasis that has been put on addressing racial discrimination in all different sectors of American life in Joe Biden's campaign, I do feel like it's going to be maybe, if not a top priority, one of his top priorities. But we'll see. I mean, again, this goes back to raising all ships. I think that we're all better off if we can eliminate discrimination, obviously, or at least mitigate it as much as possible. So what I don't think is I think it's more likely for them to do something to help fight the racial housing gap than I think it is for some giant change in the way homes are appraised. Because what they said there about, buyers are willing to pay whatever the price determines what the buyers are willing to pay. That's super true. Because at the end of the day, the market is going to determine, if someone's willing to pay that amount for a house. Now, that being said, I think the intention is good. I'm more curious how the execution is going to play out. So we'll see. There's so much already tied into the value of a property based on location, right? In addition, Biden has proposed creating a public credit agency that would help raise the scores for minority home buyers by considering things like rental payment histories and utility bills paid on time. I thought they already did that. I was really confused when I read this because I was like, wait, what? They like TransUnion and them, they already did this in the last year or so. Where they started taking people's rental payments and utility bills and stuff into consideration. Whoa. So, yeah, I don't know if that's that big of a change. This could help more buyers qualify for mortgages with lower fees and rates. Like I said, they're already kind of doing that. So, in contrast, President Donald Trump ended a rule over the summer that required many suburban communities to diversify. The President Barack Obama era regulation forced communities receiving federal housing money to assess and address housing discrimination. Many wealthier towns and suburbs had fought allowing more affordable housing, ranging from apartments and condos to smaller single-family housing, to go up. They feared this could result in lower property values. So they've actually done research that has shown and proven. I covered this in the last U.S. real estate news. If you want to go check it out, that the vast majority of people are open to low-income housing being built in their areas. So, this has been one of those issues that's been very politicized, especially by Donald Trump talking about how he's saved the suburbs and stuff. I think that it was more of campaign rhetoric than it actually is some kind of masterful policy that's going to change everything. Even the Obama era regulation forcing communities that are receiving federal housing money to assess and address housing discrimination. I just think that the whole thing, it's one of those things again where the intention is good, but the execution is what's questionable, and whether it's actually effective is another question. So I don't know honestly if I don't know enough about what the actual effect has been from the Obama regulations and what changed because of Trump, because there's just so much politicization around the topic that it's hard to know what's really going on. But I'm going to look into this some more, and maybe we'll cover it some more. So Biden has said it will require and incentivize local and state governments to do away with regulations that perpetuate segregation and make it harder for builders to put up new housing. I think that's great. His administration could make local governments understand they're going to be held to some standards. It could change local planning and policies related to the kinds of housing that can be built. It means more housing opportunities for populations that have historically been discriminated against. So just if we think about the diversity in a communities, look at here in South Florida, Coral Gables. You have beautiful single family mansions right next to multifamily housing that's also really nice now. But back in the day, it was used as housing for servants. And the reason why they did that is because they needed to have those servants nearby, not across the county. Now, obviously, I'm not advocating for that setup, but what it tells us is that the human need to be close to a diversified workforce and to basically have diversity within our communities has been around for a long time, right? And it's not going anywhere. You can write all the regulations and rules and require people to do this and require people to do that. But at the end of the day, the underlying theme, I feel like, is that we're better off when our communities are more diverse. So, I won't go too deep into all that because that's not this article. But, I do think that's like an underlying theme with the Biden administration here. So Biden would also attempt to cut the carbon footprint of the country's buildings in half by 2035. Developers will be eligible for incentives to retrofit homes to become more energy efficient and create their own clean power. So, this is like they're eligible. This is another one of those politicized things where it was like Biden's going to force the windows to be changed or whatever. No, they're going to give you incentives to do it, not force you to do it. So I think that's a smarter way to get things done, is to incentivize people to do things rather than requiring them to do things most often. And it depends, but in this case, definitely I believe that. So campaign promise, get assistance to struggling renters. This is huge, 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 huge for the real estate market. The sale and purchase market, as well as the rental market. I'll explain. When it comes to renters striving to make ends meet, Biden plans to fully fund Section 8 vouchers so that every low-income American who qualifies for the program will receive assistance. Currently, about a quarter of households eligible for the vouchers don't receive them because there aren't enough to go around. Along similar lines, Biden will offer low-income renters a tax credit designed so they pay only up to 30% of their income on housing and utilities. So, this is another thing that it's like, people like to say like government handouts. This isn't a handout. They're not paying your rent in this instance. It's a hand up. They're helping you to improve your life, right? And as more people are able to improve their lives, improve their financial circumstances, and participate in the economy more, our economy does better. Okay, I am not a believer in trickle-down economics. I'm a believer in a ground-up solution that helps people who need it the most. And I think that this is kind of along those veins. So, hey, I'm here for it. Quote, the program will be costly to administer, but it will help the individual, says Ken Johnson, a real estate economist at Florida Atlantic University in Boca Raton. The problem is that the poorest renters need help every month, not just at the end of the year when taxes are filed. Quote, the objective is good, says Guest. The tax credit dilutes some of the impact. Biden may also decide to extend Trump's eviction moratorium to prevent, it was actually a CDC moratorium, to prevent renters from losing their homes during the coronavirus pandemic. It makes it illegal for landlords to evict most tenants until next year. So they're talking about extending that. I'll talk about that in a second. The new president has also pledged to increase housing supply by putting $100 billion towards constructing and upgrading affordable housing. He will use tax incentives to erect affordable housing in areas where it's in short supply and try to limit local and state government restrictions on the amount of new construction. Quote, it's a return to a more typical agenda of Democratic president by trying to build and create more affordable housing. It's overdue. We're in the middle of a housing crisis and we have affordability issues all over the country. In addition, Biden hopes to ease homelessness by providing emergency funding to shelters and provide case management services for those in need. He will prohibit shelters that receive federal money from turning away members of the lesbian, gay, bisexual, LGBTQI community, and he'd provide more housing for disabled, elderly, and formerly incarcerated. So the reason why it's so important to help renters out is because if there is not more economic stimulus or more plans to help renters out, then landlords are going to be screwed as well. And then when landlords are screwed, then the lenders are screwed. When the lenders are screwed, then things start to look really bad for the economy. Now, from the real estate standpoint, the more renters that are not doing well, the more evictions eventually there will be. And then if we have too many evictions, we could see a drastic reduction in sale prices of homes. And the reason why that is because there's going to be a lot of landlords that are insolvent. They might have to foreclose, or they might be sick of tenants and toilets, like I've talked about many times, and they're going to go ahead and sell those assets, those properties. So if we start to see too much of that happening, then we may end up seeing a lot of foreclosure sales, and that huge influx of properties coming onto the market is going to then result in a higher supply and thus a lower sales price. So we've seen some people call it a bubble, some people don't. Some people just say, hey, the market's a little hotter than it should be and it's going to eventually correct, but it's not going to pop. Whatever it is that you believe, we have seen the reduction in supply result in an increase in price, right? Because demand has remained relatively stable and the supply has gone down commensurately to very low levels, very low levels of inventory. And then, now we see that prices are going up since Corona has started. But if we don't help out the renters, we don't provide any more economic stimulus, then it's very possible that we could see a very big correction in the housing market. Okay, so moving on. Coming to us from The Real Deal, New York real estate news, Catherine Brenzel. Real estate to Trump. Produce evidence or move on. Some were wary about the uncertainty caused by Trump's legal challenges to Biden's win. So former Vice President Joe Biden declared victory in the contentious 2020 presidential race Saturday morning after securing and clinching a number of electoral college votes from Pennsylvania. President Donald Trump, however, refused to concede Saturday, vowing he would not rest until the American people have the honest vote count, likely setting the stage for several more weeks or even months of uncertainty. On Thursday and Friday, the president's lawyers filed several lawsuits challenging the ballot counting practices in 4 states, alleging fraud without clear evidence. Federal judges have dismissed 2 of those lawsuits in Michigan and Georgia. In the latter, election officials have already indicated that they will conduct a recount given the thin margin between the 2 candidates. Biden's narrow lead in Wisconsin is also poised to trigger a recount. In interviews, real estate veterans told The Real Deal that Trump's effort to prolong the election could disrupt domestic and global markets. Some said the president should either provide evidence to support his allegations of fraud or step aside. It is hard to lose as a competitive person myself, said developer Don Peebles, which is a cool name. Hopefully he either brings forth some concrete evidence of voter fraud or we move on and he accepts the outcome of the election. Earlier this week, New York developer Marianne Gilmartin said that while some levels of uncertainty was already priced into the markets, a protracted election process could cause a disturbance. Condo.com founder Richard Swerdlow called the president's legal threats concerning, as the U.S. dollar is typically viewed as a currency of stability. Quote, when you've got these threats of lawsuits and who's going to win, the global economy is on edge, he said. Quote, in general, it creates an environment of instability. Do foreign investors continue to invest in real estate? Real estate attorney Adam Lightman Bailey said the uncertainty stemming from the election litigation won't likely affect the real estate market, but could complicate delivery of the next federal stimulus package. I think that's more likely. I don't think that we're going to see this, even if it's like a month or more, 6 weeks of this battle about the who won. You barely saw the stock market react negatively towards Biden being announced. In fact, the stock market was doing quite well after that news was announced, and probably likely due to the fact that Biden had told Wall Street donors behind closed doors way back in the primaries that if he was elected, nothing would fundamentally change. So I think that the business people, the people on Wall Street and so on and so forth, they understand, hey, look, Biden, in terms of his politics, he's kind of more of like a moderate Republican than this like socialist revolutionary that he's, was painted as by his opposition in the election. The whole socialism thing is just so ridiculous to me, but, obviously Biden is not a socialist. Obviously he's not a communist. He's been a senator for, forever and a day, and nobody until recently ever called this dude a socialist, and it's almost like they're trying to juxtapose the beliefs of other candidates onto Joe Biden as if all Democrats are the same. Well, if all Democrats were the same, then why did they have a Democratic primary? Well, if they were all the same, why didn't they just, all right, Joe, get on up there and run? No, they had a primary because people have different ideas. Same thing in a Republican primary. When Trump was running the first time around, the candidates have different ideas. It wouldn't make any sense to go ahead and juxtapose, I don't know, Marco Rubio's entire belief system onto Donald Trump, just like it doesn't make sense to juxtapose Bernie Sanders' entire belief system onto Joe Biden. Although that's another thing, is everyone likes to say that Bernie Sanders is a socialist, but he's actually a social democrat. I'll let you go Google the difference. We won't get into that right now, but people, there's very much a tendency to kind of paint things with broad strokes, but our job is to look at things objectively, look at the nuance, read into things, and do our homework to really understand what things are, and definitions of words too. People think they know what things are, but they don't. So anyways, moving on. So, the real estate industry is also watching the remaining unresolved U.S. Senate races closely. 2 contests in Georgia are expected to lead to a runoff election in January, reviving Democrats' hopes of taking control of Congress. To secure that, Democrats would need to win 2 or more Senate seats, since the vice president can cast a tie-breaking vote on Senate legislation. Many in the industry are encouraged by the prospect of a split Congress, believing it will prevent the rollback of lucrative tax breaks and the implementation of other progressive policies. So here again, yes, balance of power, checks and balances and stuff. But the dude already said nothing is going to fundamentally change. Like he's doing tweaks around the edges. And from what we read in the last article, the tweaks don't look that bad to me. Like, people often think that we're going to just go bankrupt all of a sudden as a country if we help people out. But the reality is that we're already helping people out. They just happen to be the richest of the rich. And that's what, that's what's been kind of traditionally happening in this country. And it's just not true to think that, as soon as we do anything to help the common person out, that we're going to just go bankrupt and all of a sudden we become, communist China or Soviet Russia or something. Like, that's not how it works. And it's so intellectually lazy and disingenuous when people make those assertions. I don't think that he's going to roll back tax breaks that are positive or that help people that need it, right? If you're somebody who doesn't need those tax breaks, maybe he might roll them back. You know what I mean? But if you're somebody who needs the tax breaks, he's probably going to work around the edges to make sure that you're not hurt by it. We'll see. So, quote, I hope we get the centrist Joe Biden and not the recent Joe. Again, what recent Joe Biden? The dude has been a centrist the whole time. Hate it. I hate this. So, bad take, Shahab Carmeli. Bad take. Developer, we're skipping over it because it's such a bad take. Developer Francis Greenberger said that even if Congress is split and Biden doesn't have much influence over legislation, the real estate industry would also benefit from, quote, having various cabinets and divisions of government led by people who align with the traditional mission of those organizations as opposed to their other interests. This, I do think, is important. Quote, for example, Andrew Wheeler, the Trump-appointed head of the EPA, formerly lobbied on behalf of the coal industry. So the dude in charge of protecting our environment was a coal lobbyist. Not good. We got to avoid those things. So Lightman Bailey said Trump supporters in real estate will likely have a better time stomaching a Biden presidency than those who oppose the president would have grappling with another 4 years of Trump. I think that's a really interesting statement, and I don't disagree. I think that I don't think Biden is going to be bad for real estate, and the people who supported Trump that are in real estate, I think it's going to be easier for them to go along with what's happening under a Biden presidency, what will happen, than it would have been for the 75 million or whatever people who were crying in the streets over a Biden victory because they couldn't stomach another 4 years of Trump. Is what it is. Not saying that's my opinion, but imagine those people. I mean, that's a huge chunk of our country. How much is that going to affect people's psyche and mental health, and not to mention that it didn't really seem like they were doing anything, the current administration, about the pandemic. And that's one thing I just don't really, I never understood that about Trump's point of view on the virus and opening up the economy as it relates to opening the economy. Because if you want to open the economy, you want businesses to do better, then you got to take care of the virus first, man. Like, dude, what are you thinking? Like, I get that he wanted to be this like cheerleader and everything's good and fine, don't worry, and like, cool. I feel you on that, but like, you can't just pretend that a virus doesn't exist. Like, all the bravado and gusto and charm or whatever in the world is not going to prevent people from dying from a virus. So I never understood why they just kind of took this stance of like, well, let's just pretend like it doesn't exist and tell everybody we're rounding the turn and we're rounding the curve, and it's going to be over in April, and now it's going to be over in the summer, and eventually it'll be over. And just like, dude, like, we know it's real, we know it's happening. Stop telling us that it's not, and actually put that energy into fighting it. And then if you do, then the economy will open up sooner. I think Trump could have easily won re-election if he had taken a more serious stance on the virus. I don't know who in their right mind would disagree with me on that. So moving on, point of this whole story is, they're basically, real estate people telling Trump, hey, look, man, bring some evidence forward, and we'll see what's up about this voter fraud, but otherwise move on because it's time to do business, right? So next story. This one's coming from the commercialobserver.com, from Tom Acitelli. Biden in commercial real estate, 4 intersections to watch. Changes to opportunity zones, affordable housing, 1031 exchanges, and SALT, plus another stab at infrastructure week. The incoming Biden administration's decisions on a range of issues could impact the commercial real estate market and industry directly. Here are the 4 areas to watch as the former vice president transitions to the presidency this winter. The pandemic, the big one, right? The coronavirus pandemic is by far the biggest challenge that commercial real estate faces. The virus has emptied offices and hotels. Again, going back to what I was just saying, like, dude, if you want the economy to reopen, you have to take care of this virus, man. Like, look at like New Zealand, who they have that photo of all the people in the rugby, like 30,000 people in the rugby stands or whatever. And they're good. Like, they had like no cases and stuff. So like, anyways, virus has emptied offices and hotels, caused a spike in loan delinquencies and a drop in real estate investment trusts, stock performances, tanked leasing and sales, and banged perhaps the loudest death knell yet for brick and mortar retail. That's a big statement. Until the coronavirus is under control, industry analysts, owners, and brokers say a return to a new normalcy in the market and the industry is out of the question. I mean, this is what business people were saying from day one of this virus. And you would think with a businessman as a president, he would understand that. That's why even further, I just really don't understand what his plan of attack was on this pandemic. And, he really shot himself in both feet. So President-elect Biden is vowing a much more direct federal attack on the virus. President Trump is, in the closing days of his campaign, said repeatedly that the nation was rounding the turn on the pandemic. The country has instead recorded more than 90,000 new coronavirus cases a day since November 4th, the highest figures of the pandemic. So it's like, dude, at the same time you're telling us that we're rounding the turn, we're literally hitting the highest numbers that we've ever hit in terms of cases. And like, do you think that everyone's just going to believe you over like all the scientists and doctors and people who work in ICUs and stuff who are like, holy shit, we're overloaded with new, cases and our ICUs are filling up? Like, are we just supposed to think that's not true because homeboy's like, we're rounding the turn strongly? Like, no, we're not. So we'll see what happens with the pandemic. Infrastructure. Trump arrived in office surrounded by high hopes and expectations for translating his experience in New York real estate into tangible infrastructure projects nationwide. Various attempts at jumpstarting those projects floundered against other priorities, political infighting, and innumerable controversies. An infrastructure week, which the Trump administration originally hosted in June 2017 and thereafter tried to resurrect at various points, has become kind of a running joke. So the thing with that, if I remember correctly, was like, they were like, oh, infrastructure week, we're so first of all, he campaigned on like doing all this stuff for our infrastructure, and then nothing ever happened. And then there was like this whole infrastructure week, and then that became like nothing became of that either. So it was just like, okay, like, why are you talking about infrastructure if like there's nothing happening with it? But the pressing needs behind that fleeting effort have not gone away, and Biden has signaled that he would be open to discussing major projects such as New York's Gateway, which includes new and improved Hudson River train tunnels, and the retrofitting of office and other buildings nationwide to make them more energy efficient. This signaling from Biden has also included a willingness to partner with private entities and state agencies such as the Metropolitan Transportation Authority on various plans. Any infrastructure effort, of course, would involve lots of federal funding. That means it could all crash against DC's partisan partisan gridlock. Yeah, I mean, something like the Hudson River train tunnels and stuff like that, like they're to promote intrastate commerce. So you think, okay, federal funding should go to that, right? Well, I don't know. I mean, maybe you could make a case that it should be funded by the states that benefit from that. Why should taxpayers in Oregon or any other state pay for something that only benefits people in New Jersey and New York and so forth, right? So, I mean, I'm not saying that's definitely how I feel. I don't know if I have the strongest opinion in the world on that. I think I would have to personally see the budgets and see, okay, do we have enough money for this Hudson River train tunnel and still enough to do federal stuff? But maybe that's an example of where like states' rights could take over and they could coordinate their own situation, and then that would benefit their citizens and be paid for by their citizens rather than some random people over there that are never going to see it. So we'll see. We'll see what's up with that. But definitely, I think that it could all crash against DC's partisan gridlock. That's definitely a distinct possibility. Affordable housing. Chalk up the precariousness of affordable housing financing and funding to the pandemic, too. The virus's negative economic effects have impacted local and state budgets nationwide, which has in turn dragged on funding for affordable housing creation and preservation. And the pipeline for financing privately backed affordable housing development has also dried up. It will take federal wherewithal to get the money flowing again. I agree, that's true. Candidate Biden proposed a number of affordable housing initiatives. Perhaps the most prominent among these proposals is a $100 billion affordable housing fund that includes $65 billion for local housing authorities. So I think that this is a part of that overall $650 billion housing plan. Let's keep it going. $65 billion for local housing authorities. New York City Housing Authority could use some of that. Biden I don't know why New York City is getting preference on all these federal things. I mean, maybe there's a reason that I don't know, but they're mentioning it a lot. So Biden has also proposed boosting funding for the Section 8 rent subsidy program and throwing the federal government's influence behind local zoning changes to foster more housing development in general. Again, though, so much of this hinges on political accord in D.C. I think that Biden is actually uniquely posed since he is a centrist, and I think, I mean, he's more of like a moderate Republican from the 90s than he is this, progressive revolutionary. And keep in mind our policies in the U.S. are historically have been pretty right of center when you consider the center of like the rest of the world. Excuse me. So, it doesn't take much for somebody to appear super progressive in our political landscape. So, tax breaks. In a move aimed squarely at blue states such as New York and California, let me get a little sip of water, that he thought didn't sufficiently support him, Trump slapped a cap on a tax break that barred taxpayers from deducting more than $10,000 in state and local tax, SALT, from their federal income levies. The Democratic-controlled House voted in 2019 to temporarily repeal the cap, but that move went nowhere in the Republican-controlled Senate. In the end, it's unclear if many taxpayers are actually able to use SALT deductions due to the alternative minimum tax. Nevertheless, the break could return under a Biden administration, especially if the Democrats retake the Senate. At the same time, though, a Biden West Wing could do away with a significant portion of another property tax break. Candidate Biden said he would tweak existing rules covering 1031 exchanges, also known as like-kind exchanges. They allow investors selling a property to defer capital gains taxes if they put the money from the sale into another property. Unsurprisingly, the exchanges are quite popular with real estate investors. Biden's plan would limit their use to people pulling in less than $400,000 annually. His administration would then use the money from taxes on those making more than $400,000 annually to help pay for a $775 billion plan for child and senior care for 10 years. So I don't know. I don't really think that this is a good idea. First of all, I think 400,000 is an arbitrary number. So it's like why 400,000? And why put the limit on? Why make the limit based on someone's income? Why not make it based on the potential loss of tax revenue from the government, right? So what I mean by that is, instead of limiting it to people who make X number of dollars a year, why not limit it to like, hey, you got 5 a year, right? You can do 5 1031s a year. So I don't know if 5 is the right number, right? But they could figure that, hey, based on our calculations, if you did more than 5 1031 exchanges per year, then the potential lost tax revenue from the government would equal X amount, and we want it to be lower by whatever. So the number is 5, right? Or whatever the number ends up being. But like, you can do the math to figure out how to make that work where you're not just arbitrarily basing it off of people's income. Because, at the same time that I think, okay, $400,000, you're doing all right, you know what I mean? I also feel like, why? Like, what's the point? Like, eventually you're just really kicking those taxes down the road, right? You're kicking the can down the road when you do a 1031. Eventually the taxes are to be paid. So like, why put this cap on 400,000? Because then those are 1031s that won't happen, that are capital gains tax revenue and other government tax revenues that will just not ever happen. So you're almost kind of limiting yourself as the government when you make this assertion. But again, I'm not a tax official or, an accountant. I don't know all the specifics of the numbers behind the scenes, but it would just make sense to me more. And I feel like it would be also less divisive if you were like, all right, look, you got 5 1031s a year, or something like that, and then that way it's kind of, it's less divisive, and it's also a little bit more based on the numbers, and the tax revenue and potential revenue loss than it is about an individual's income, which I think can feel a little bit, a little bit of like an attack on people that are making that much money, So, investors in real estate trade groups argue that diminishing 1031s exchanges could sharply disincentivize investment, particularly during downturns. I don't agree with that. I mean, maybe during downturns, in terms of like the market, like the stock market, but in terms of real estate downturns, you're crazy if you think that just because someone can't do a 1031, they're not going to take advantage of a down real estate market. And another thing too is they're gonna invest in something. You know what I mean? Like, you're like, if you're an investor, like, it doesn't help you if your money's just sitting in the bank. So you're gonna invest in something. So I don't think it's going to disincentivize investment. It's just going to make it a little tougher to figure out what you're going to put your money into. And again, I don't even agree with this plan, but I don't agree with that statement either. New York developer Francis Greenberger, who wrote the Biden campaign explaining his opposition to the proposed 1031 exchanges, told Commercial Observer he estimates that as many as 2/3 of real estate transactions nationwide could be affected, as at least one party is going into or coming out of a like-kind exchange. Most of these deals would involve smaller investors too, he said. Finally, well, then, the smaller investors are not going to have to worry about it because they're probably not making a $400,000 income every year. That's a lot of money income. And also, too, keep in mind, if you've got, if you've incorporated or put your properties into an LLC and, it's not your personal income. Again, I'm not a tax accountant or anything like that, but I'm pretty sure there's ways around, having your income look like it's over 400,000 on paper just by creating an LLC or a corporation or whatever. And that's the corporation's income, not my income. So, I think that there's a lot of loopholes there that would have to be looked at, and figured out. So, finally, there are opportunity zones that Trump made the signature of the 2017 federal tax overhaul that he backed. The OZs were designed to foster investment in supposedly blighted areas by permitting investors to defer taxes on capital gains that are invested in a qualified OZ fund until December 31st, 2026. As long as the investment is held for 7 years, only 85% of the gains in such a fund are subject to tax. If the investment is held for a decade, any new gains are tax-free. Unsurprisingly, investors have cottoned to OZs, and Trump has often touted their effectiveness at fostering investment in blighted areas, but some have criticized the programs as falling short of its goal of encouraging the sort of long-term investment that revives communities economically, and that some investment only furthers the sort of gentrification that then displaces long-time residents. In other words, critics say that OZs reward investors, but not necessarily the zone themselves. I definitely agree with that. And I know so many people who have been involved in these opportunity zones, and from realtors to investors to all kinds of people that, there's a very favorable opinion of them in the real estate world. And I might be the only realtor who would say this, but I think the opportunity zones were kind of like a scam. And the reason why I think that is because, like they just said, really there's no verbiage to disincentivize further gentrification of these neighborhoods, and it doesn't really do much to help the people living there. It just makes it so that it's easier for investors to, not easier, but it incentivizes investors to go and invest in these neighborhoods because they can defer some of the taxes and potentially not pay any of the new gains after a decade, right? So I mean, how does that help those communities other than, like, I guess maybe it cleans up the communities a little bit, but then what are the people in the communities going to do? Like, is it going to increase their property taxes? I mean, there's so many considerations, and I don't think that it was the way the legislation was written. It wasn't focused on helping the people. It was focused on helping the investors. And the idea was kind of like a trickle down economics version of real estate where, oh, we're going to help investors. And then the investors are going to go and because they're going to be doing really well, the communities they're investing in are also going to do really well. But the execution to make sure that the communities did well also was not very well thought out because it hasn't happened. I mean, this has been a few years in the making, and how many, blighted areas, as they say, have we heard of that, now they're having a revitalization? Not any in Miami, I can tell you that. So Biden has said that he would reform the OZ program, though it's unclear exactly how. Candidate Biden said the reforms would include requiring investors to provide detailed reporting and public disclosure on their OZ investments' impact on local residents. I guess that's a good step. I mean, I don't know. We'll see. The reforms would also direct the Treasury Department to more closely parse which areas are declared opportunity zones. That, I think, is smart because there are a lot of opportunity zones that I've seen. If you go and look at the OZ map, where it's like, that's not an opportunity zone. Like, that's like straight up, like, I think of the South Park episode Soto Sopa. It's like, that's not an opportunity zone. That's an area that's already been up and coming for a long time. So I think that that's a smart idea there. Tweaks such as these wouldn't require congressional approval. So interesting story. I mean, we'll see what Biden does. I mean, like I said in the first story, a lot of stuff that gets talked about by candidates when they're campaigning, when it actually comes time to writing legislation and passing it, ends up being totally different than what they had originally proposed. So that's one reason I try not to get too worked up about proposals from candidates when they're campaigning, because it's like, okay, you want to give everybody a unicorn and do, this, that, and the other, but at the end of the day, that ain't going to happen. So anyways, moving on to the last story of our U.S. real estate news for the day. So, coming from Florida Realtors, actually, even though this is a national story, from Susan Tompor, the refinancing boom goes on as rates remain low. Homeowners often save hundreds of dollars a month by refinancing at today's record low rates, and a new fee that kicks in on December 1st won't make a big difference. Depends who you ask. Hard to imagine, but all the noise of 2020 actually might have blocked out the sound of the refinancing boom for many people. But homeowners who drag their feet and have yet to refinance a mortgage might even snag a lower rate now than if they acted in January or February. The 30-year fixed rate mortgage fell to another record low for the week that ended November 5th, hitting 2.78%, according to Freddie Mac. That's down significantly from 3.69% for the same time a year ago. The uncertainty relating to this election, as well as the coronavirus pandemic, have helped to drive down rates to new lows. The mortgage rates began to significantly fall beginning in April after the Federal Reserve started buying mortgage-backed bonds as a way to offer relief during the COVID-19 recession. Consumers who refinance can save money on their monthly mortgage payments, freeing up cash to cover other bills. You must verify your income to qualify, so refinancing is not an option if you've lost a job. Retirees, though, may be able to refinance a mortgage if they can point to a steady pension or annuities that can be used to repay the debt. In general, homeowners can be a good candidate for refinancing if they built up equity in their home, are able to refinance their existing mortgage rate to one that is at least 0.75% percentage points lower because it costs money to refinance, and plan to stay in their home for at least 3 years to 5 years, according to Adam DeSanctis, a spokesperson for the Mortgage Bankers Association. Refinancing activity is expected to soar to nearly 71% this year compared with a year ago. Overall, in 2020, the mortgage industry expects to hit $1.78 trillion in refinancing originations. That's insane. The highest level since 2003. But forecasts call for originations to slow next year, dropping by an estimated 46% to 946 billion. That's still a lot. As interest rates fell during the pandemic, the opportunity to lock in a low rate grew in 2020. United Wholesale Mortgage CEO Matt Ishbia said homeowners will want to shop around for the best rates, especially since there is a significant disparity in rates being offered by lenders. Some lenders, he said, are pricing themselves so they're no longer competitive because they're already overwhelmed with a glut of refinancing applications given the ultra low mortgage rates. So that's something that's happened. Lenders have been so busy that they just artificially jack up their rates to slow down the incoming rate of business that they have. Quote, "It's never been this low, and that's part of the capacity issue," Ishbia said. A large segment of homeowners could still benefit from refinancing. Homeowners should be able to get a better than average refinancing rate in the 2% range if they shop around. United Wholesale Mortgage reported that it's closed on $54.2 billion in loans in the third quarter, up from 81% from its $29.9 billion in loans closed in the third quarter of 2019. That includes refinance loans and mortgages for new purchases. Ishbia said between 65 to 75% of the loan volume involved refinancing for the third quarter. New refinance fee debuts December 1st. The Federal Housing Finance Agency is imposing a 0.5% refinancing fee that kicks in December 1st on most mortgages. If your refinance mortgage is under $125,000, you will not be hit by this fee. On a $200,000 mortgage, the fee would add another $1,000, but not all lenders are passing all the extra costs directly to consumers. Ishbia said that that's yet another reason for homeowners to shop around and do some research by working with a mortgage broker. He recommends going to findamortgagebroker.com. I'm not necessarily promoting them, but he is, I guess. I don't know anything about him. A site that's powered by United Wholesale Mortgage division of the United Shore Financial Services. Quote, "Every lender is so different," he said. That's true. And I definitely agree with what he said about working with a broker rather than don't go to Bank of America or Chase or Regions, or worst is Wells Fargo, because they're only going to give you the options that they offer, the products they offer. If you go to a mortgage broker, they can shop the whole market for you. So if you're one of my clients, you already know this. I tell you this all the time. Experts say homeowners shouldn't think they need to rush in November to refinance before December 1st kickoff for the extra fee for the extra free. I think they meant to put fee. First, you might not close that loan in time to avoid the fee. Second, the fee might already be baked into your loan offer, so you got to ask them about that. Phil Shoemaker, president of originations at Ann Arbor, Michigan-based Home Point Financial Group, financial mortgage lender and servicer, said many lenders across the country have already included a new 0.5% surcharge in their pricing before that fee officially goes into place. Quote, "It's still a favorable time to refinance compared to where rates have been in previous years, but there isn't any kind of mad dash to beat the buzzer, so to speak, before the fee goes into effect." Right now, mortgage rates remain well below where they were at the beginning of 2020 and during the early days of COVID-19 pandemic. An economist at Zillow said, "Uncertainty pertaining to the pandemic has continued to place downward pressure on rates into the fall. But if we start to see signs of improvement in the jobs picture or other positive gains for the economy, experts say rates could move upward at some point. We're not quite there yet. I think it's going to be years, at least 2 or 3. The uncertain outcome of the election appears to have led to a spike in demand for government bonds, placing downward pressure on mortgage rates. I don't know why that would happen. The rates on bonds are so low. I guess, there's people who need that diversity in their portfolio. So anyways, bond market investors appear to be interpreting the uncertain election results as a sign that more economic stimulus is unlikely in the near term. That's, I think, is the real problem. Quote, "The development helped push mortgage rates notably downward. Given the still uncertain election results, more sharp movements in mortgage rates in either direction may be on tap in the coming days and weeks. Consumers need to recognize that their own situation will influence the mortgage rate that they're able to snag." That is one of the truest things in this article. Before you attempt to refinance, you should check your credit score. Also, review your credit report for any errors that could be driving your score down. Go see a credit specialist if you need to debate something or challenge something on your credit report. Quote, "It's a big range in interest rates depending on where your credit score is. Said this chief economist. Get actual quotes for your actual situation, right? Don't just go to Rocket Mortgage and get a pre-qualification. Go to an actual mortgage broker and get a pre-approval, which is the real deal. Homeowner with a credit score in the range of 620 to 639 might be looking at an annual percentage rate of 3.8 when refinancing, but someone who has a score of 760 or higher might be able to qualify for 3%, he said. APR would have reflect fees and offer you a look at the effective interest rates over the life of the loan. If you have more equity built up in your home, you typically qualify for a better rate as well. So this person said very high refinancing activity is very high compared with earlier in the year. He noted the average Freddie Mac rate for 30-year mortgage was 2.81 last week, down from 4.94. 2018, down from 3.69 a year ago. So yeah, I mean that makes sense that it's been higher this year, the activity, because the rates at the beginning of the year were higher. I think we started off the year in like the mid threes. So yeah, a borrower who took out a $300,000 loan in September 2015 at 3.91%, according to LendingTree, could save about $300 per month on their payment and more than $19,000 in the lifetime interest by refinancing at 2.87. So huge. In a study this fall, LendingTree noted that about 86% of mortgage refinance applications are approved across the country. Homeowners with high credit scores and increased home values are more likely to be approved, right? Because you got something to prove, you got something to put on the table. According to LendingTree, South Dakota, Utah, North Dakota, and Nebraska have the highest rates of approval at 90% or more. Florida and New York are the states with the lowest approval rates. Greg McBride, chief financial analyst at bankrate.com, said mortgage rates remain near record lows, and refinancing is a way to generate a steady stream of monthly savings on a mortgage and potentially tens of thousands of dollars in savings over the life of the loan, depending on how long you stay in that home. As of November 4th, according to Bankrate's latest survey of the nation's largest refinance lenders, the benchmark 30-year fixed rate refinance rate was an average 3.03%. Average rate for refinancing was 2.68 for a 15-year fixed rate and 3.25 for a 5/1 ARM, which is adjustable rate refinance. So in general, he noted refinancing rates have tended to be running higher than mortgage rates for new purchases. Quote, moral of the story, shop around because there are plenty of sub 3% rates still out there. So now you guys know that that's going on. All right, so that's it for the U.S. real estate news this week, and we'll be coming with another one next week, and then after that, it'll be on a bi-weekly schedule. So definitely make sure to hit the subscribe button, ring the bell so you get notified for all my new videos when they drop, and go follow me on Instagram at jake.miami. And I will see you guys on the next video. Sell smart, buy bold. And if you're interested in the South Florida, or actually it's just Florida real estate news, then the next video is for you. All right. See you guys next time. Peace.